Hello, good afternoon, good morning. Thank you for joining us. We're going to go ahead and get started. We're so glad you could join us today. I'm Josh McCulla, Chief Marketing Officer here at Greenshades, and I'm genuinely excited to spend the next 30, 45 minutes with you all. Thank you for joining us. Now, I understand that tax and compliance topics aren't usually the thing people circle on their calendars as highlights of their week, but today's session is really an important one. So if you're here, it's probably because you're trying to make sense of how this new One Big Beautiful Bill Act, or the OBBBA, as we started calling it around here, is going to impact your payroll, HR, and compliance world. And there's a ton of information swirling around, and it can probably feel a little bit like drinking from a fire hose. And our goal today is to cut through the noise, to simplify some of the messy parts, and to leave you with a clear, practical, guide that you can actually use to feel more confident heading into year end. And hey, if we can, make this OBBBA feel a little less intimidating, then I'll call that a win.
So today we're looking at what we knew before. Our last session was in August, and what has changed since then. We're going to have some ask and answered questions, some scenarios, and Q&A and resources. So if you do have questions, don't hesitate to ask. If we have time, we'll address them. If it's in the middle of a session and I see you have a question, I'll try to address it at that time. Moving on. So when we met in August, we had the law, but we didn't really have anything beyond that. The roadmap wasn't available to us. Since then, the Treasury has come out with some draft forms. They have the W-2 and the W-4 for 2026, how they're going to be able to capture these savings, that is the taxpayer or your employees, with the 1040 and implementing the W-4. And we even have the proposed tipped occupational list that hasn't been finalized yet. So we're going to focus first on the tip income, because that's the big one. We all heard this as no tax on tips, during the presidential campaign, that both sides, no tax on tips. And it was sort of advertised as an exemption, but it's not really an exemption. It's a deduction. We know that it's capped at 25%, and that's, $25,000. And it doesn't matter whether you are a single filer or a joint filer. It is the total cap there is the $25,000. Depending upon what that taxpayer's AGI and what their filing is, it could be $150,000 for the single filer or $300,000 for the joint filer when that $25,000 starts to decrease. We know that this is available whether the taxpayer, your employee, itemizes or not. It's retroactive back to January 1st of 2025, the beginning of this year, and it's set to sunset December 31st of 2028. So far, the IRS has said this is our transitional year. So you're allowed to go back and just estimate. You don't have to do the actual calculation. So what we don't know is what's qualifying as a tip position. So they do have the list, and we do have it published on our website, and you'll have the link to it through the webinar here. And they're asking for the comments, and they gave up until October 23rd. If you have comments regarding this list, make sure you make them. The IRS staff working on updates has not been furloughed, from what I understand, so they're still working on this. So if that employee is in one of these tipped occupations, that's the first qualifier. The second qualifier is the type of tip. Is it voluntary or is it customer related? Josh, you can go to the next screen. So you say, well, what's voluntary versus not voluntary? And we'll get into that on one of the next screens. Where you'll be reporting this is in box 12 for 2026. They have two codes for tips. TP for the qualified tips, and TS is for those tips that are in the realm of people in positions that aren't in those qualified tip positions. Your attorneys, let me see, I have a list here. Anybody in the health industry, accounting, or actuarial, that type of work where it's not a typical tipped position, those would be going into the TS position. Also on the W-2 for 2026, you're going to be using the occupational code, which is the code in the left column of that list, and you're going to be putting that code in box 14B. When you're looking at that list, you're going to see on the, like I said, the first column there is going to be the Treasury code, then the description, and then over in the far right is the SOC code. You are probably all familiar with SOC codes because there's a number of states out there that require them. They are not the same. So just remember that. These individuals, these employees in these positions, you're going to have the SOC code along with that tipped position code. Moving on to the next slide. So what is an automatic service charge? How many times have you gone to the restaurant with a large group and you see on your bill that 18%? That 18% is actually a service charge. And hopefully you in the industry are aware that that service charge is not a tip. It is wages. It's got to be classified as wages. So the answer to that is generally no. Qualified tips must be voluntary and the customer has to initiate it. Now, in this industry, with the qualified tips, we can go to the next slide. This is a scenario. So Maya is, she works at a restaurant. That's a full service restaurant. She is in a qualified position. So that position code, the 105, is going to be in box 14B for 2026 W-2. Her tips that she receives, her qualified tips, is going to go in box 12 with the code TP. If she has that large party that is assessed that service charge, those tips, that service charge is going to go right directly to her wages. She won't have anything going in box 12 TS because this is not the specified service trade or business. So the key takeaway here is if it is a service charge, or you can classify that as an auto gratuity, they're not qualified tips. If that individual, say a bartender, is supposed to be certified by the state, and they aren't, they're working on it, but they're not there yet, but they're working behind the bar and they're getting tips. Those tips, because it is what they classify as illegal activity because they're not certified yet, those are not qualified tips. Maya's the owner of the restaurant that she works at, or any of the partners associated with that restaurant, any tips that they receive, they're not in a qualified position. So those will not be qualified tips. We can move. Okay. So the next topic is the voluntary tip reporting program. The IRS has a number of these. One of them is called the TRDA, a tipped rate determination agreement. Another one is GITCA, that's how I say it anyway, GITCA, Gaming Industry Tip Compliance Agreement. So these are agreements between the employer and the employee. And if you're in this industry, I'm sure you're well aware of that. So there's set rates for different positions. So for example, like 12% for a table server or 18% for a dealer. If the employee receives additional, tips above that left on the table, they would be reporting them on the form 4137. According to the bill, yes, they're going to be qualified as tips. Tips paid in this program, they will be qualified tips. Moving on. So the next big topic is the overtime deduction. This can get a little crazy. The overtime deduction is limited to just the Fair Labor Standards overtime. All those states out there with their separate additional overtime rules, yes, you do have to pay the employee those overtimes, but they're not part of the qualified overtime unless they fall within the parameters of the Fair Labor Standards Act. And they will get reported in box 12 with the code TT. So part of the deduction is going to be this one is broken out into a single filer versus a joint filer. So at a joint filer, it'll be $25,000. For a single, be half of that, $12,500. Again, the AGI will cap or start to decrease those amounts of deductions. It doesn't matter, again, whether you itemize or not. These are all going to be reported on a new form called a Schedule 1A. And again, it is retroactive to January 1st, 2025, and will be sunsetting December 31st of 2028. It will be showing up on the overtime, or I'm sorry, on the W-2 with that special code in box 12. And it can get a little crazy. Okay. So we ask, well, what qualifies? Like I had said, it's based upon the Fair Labor Standards Act. If you have additional overtime because you're in a state, and we can go to the next slide, that may have daily overtime. California has daily overtime. I think California is probably the most complicated state out there. So you have an employee who works more than 8 hours on a day. That time over that 8 hours in some states is assessed. You have to pay them overtime. Does that mean it's going to be qualified under the OBBBA? Not necessarily. So if the employee, say, one day works 10 hours and the rest of the week only works 4 hours a day, if they don't reach that 40-hour threshold, none of their overtime that they're paid is going to be qualified overtime. And again, it's just on that overtime premium. But it could be, if they do meet that threshold of the 40 hours. Next. So we have another scenario here. Jason, who's a field tech at a multi-state construction company, he averages about 45 hours a week. So focus on that overtime premium. Jason gets paid $25 an hour. 5 of those hours are going to be classified as overtime. So half of the 25 is $12.50. Those 5 hours times the $12.50, that's $62.50. That will be qualified as overtime for that week. If he averages that, 5 hours a week all year long, he's going to have about, probably a little over $3,000 reported in box 12 with that code TT. If he works in California, his overtime might be a little bit different depending upon what days he worked and how many hours that day he worked. So if there was a day that he worked more than 8 hours, maybe he works 9 hours every day for 5 days. So that 9th hour would be at time and a half, which would be the same as the Fair Labor Standards Act. But what if you worked 10 hours one day and, the rest of the 35 hours were spread out over the next 6 days? Sometime on that 7th day that he's worked straight in a row within that work week, for the first 8 hours that he works, will be at a time and a half that they have to be paid. Will it qualify as overtime for the deduction? It all depends upon where that threshold of that 40 hours plays into. Again, it's only at that half of the overtime rate, or half of the regular rate of pay for the overtime premium. You may want to set up a couple different earnings codes. All of you already have overtime broken out on your pay stub, but so the employee is aware of what's qualified overtime and what's regular overtime, you may want to break that out into 2 separate codes. We have it shown here as the top one there. That would be the Fair Labor Standards Act premium, that half of the regular rate of pay, which would be eligible for the overtime deduction, the qualifying, and then everything else. Or you may want to set that up as a memo line that will accumulate, but it is not part of the total earnings. Depending upon how you want to, how your payroll sets it up, basically. Hopefully they will be able to accommodate all these extra lines to track the different, tips, qualifying tips, overtime, qualifying overtime. So moving along, the W-4. So this is a screenshot of the 2026 W-4. Where they modified it is in the deduction section. I think it's on page 5. So they have added in the qualified tips, the qualified overtime, the senior citizen, that $6,000 credit. When the employee chooses to capture these savings during the calendar year, they're going to modify their W-4. They can use the 2026 as an example if they want to modify it for 2025, because 2025s have not changed. But what's going to happen is they're going to be putting the total deductions that they feel that they're going to be eligible to claim on here, and it's going to be the annual. Just remember it has to be the annual, and that annual amount then gets carried to line 4B on the front page of the W-4. If they want to capture the savings, the additional savings with the child tax credit, that would be on line 3. This is now the time for you to check to see that when your payroll processes these W-4s, when they're doing the payroll, they're going to capture these savings. If not, that's something you're going to have to look at, because this is going to be very important if the employee wants to be able to capture the savings during the calendar year. You have to be able to implement lines 3 and 4 of the W-4. So moving along, this is how Renee would adjust her W-4 for 2025. Like I said, you can use the 2026 draft form as an example of how to come up with those amounts in the deduction section that you would put on line 4B on the current W-4, the 2025 W-4. So Renee is a banquet captain at a hotel. She earns overtime and receives tips. So she's in a qualified position to get those tips. For 2025, she doesn't want extra tax withheld, so she wants to capture the savings during the calendar year. Now, this would be from the point that she modifies her W-4 to the end of the year. So will she be able to capture the full savings for the year? No, because it will take that annual amount and it will factor in the pay cycle of your payroll. Some payroll systems annualize their payroll. Others, if you look at publication 15T, where these are set up, your tax tables are set up, they have it where that's the annual amount. And if your pay cycle is monthly, you divide that annual amount by 12 and factor it into your payroll. So back to Renee. She has 15,000, the 5,000 and the 10,000. That's going to go on line 4B of the W-4. You, the employer, do not have to do anything with her wages other than report the how you doing it now, the tips and the overtime. The W-4 will factor in how the employee wants to receive those savings. Now, during the calendar year, when they file their 1040 at the end of the calendar or tax year, or break it apart, it's the only way. This is the so your wages are the same. Your payroll system has to implement that W-4. The W-4s stay the same until the employee changes them. We're all aware of that. And they'll stay that way until the employee changes it again. The only time that would change back to a default is if that employee is requesting 100% of exemption. That has to be renewed every year by February 15th. So going to the next slide, and we sort of answered this question already. Do you have to adjust withholding? No, you're letting that W-4 trigger how the employee wants to receive those savings. So we do have a couple questions here. For clarification, qualified tips and cash will be reported in box 14? No. Everything else on the W-2 is going to be reported just as it is. Your box 6 and 7. Your 6 is actually Medicare taxes withheld. 7 and 8 relate to tips. Those are going to be reported just as they always are. The code TT is for 26 W-2, yes. And we're going to go over how to possibly report these for 2025. The question here, I understand that our union workers are paid overtime after 8 hours daily. You're going to have to pay them that, yes. But what's going to be qualified is those overtimes based upon the Fair Labor Standards Act. Only that overtime premium based upon the hours worked in excess of 40 hours in that work week. You're going to pay them the overtime, yes. And they're going to be taxed with the federal taxes, Social Security, Medicare, just like the overtime and the tips. Those, they're still going to be taxed just like they are right now. but you're going to be tracking what is the qualified overtime and what is the qualified tips. And that qualified overtime is based upon the Fair Labor Standards Act, anything over 40 hours, and that work week, the overtime premium. So let's go to the next slide here. This is what the W-2 is going to look like for 2026. It has been approved. So they have 4 new codes, and we've gone over a couple of them already. The TP will be the qualified tips. The TS, they describe this as cash tips reported to the employer. And then in the instructions, in the W-2 instructions, it's relating to the business's qualified business income and the section of the 199A, which would be for those like attorneys and accountants and athletes. They are not in the qualified position. So that would be what is reported in TS. TT is the overtime. And then the last one there, the TA, Trump accounts, we haven't gone over that. But what that is, if you have employees who are under the age of 18 or employees who have dependents under the age of 18, you, the employer, can put money into an account like a 401k for these individuals. Follow the guidelines on how much you can put in there and how you would implement that. The other big change is the box 14. So we all know box 14 is informational. 14A is going to stay that way. It's like the legacy. It's still going to just be informational. This is where you can put, a lot of states require certain information in box 14. Taxable fringe benefits you can put in there. The 14B is going to be that occupational code. Now, that occupational code, what if that person has been working in more than one tipped position? What code are you going to put in? I would recommend at this point to put the one in that they've earned the highest tips in. We don't have any guidance on it just yet. So the question is, how are we going to report this for this year? We don't really have guidance. We know as employers, we're going to have to provide this information to our employees somehow. So how are we going to report it? We can use the pay stub, possibly, that's all broken out. We can use that box 14 for 2025 because it is just informational. We know that, the IRS is offering transitional relief for this year. So your best estimates will work. The tips, if you've already tracked them separately and that position was eligible and that employees, all the tips that they received were qualified tips, you have that number already. If you got to back out those service charges, good luck. I don't know how you're going to track that. I'm sure you have something in your system that will be able to track those out. Again, it's going to be a good estimate. Keep track of how you come up with these estimates in case you're ever audited or ever questioned. How did you come up with my estimate here? The overtime. Again, this is a suggestion. Okay. This is not legal guidance. This is a suggestion. The overtime. If you're in states that don't have that extra overtime, you're following the federal regulations. You're not in a union that it's requiring a special rules or anything like that. Basically, it's going to be a third of the total overtime that you've paid. A lot of people track the overtime at time and a half, separate from regular rate of pay. If you are in a situation where you've paid additional overtime based upon maybe a union rule or a state rule, this is a suggestion. You're going to look at the total hours worked for that employee for the year. And this is an estimate, true estimate. How many weeks have they worked? So we know the Fair Labor Standard Act is anything over 40 hours. So say they worked 40 weeks. 40 weeks times 40 hours, that's 1,600 hours. How many hours did that employee work? Did they work 1,700 hours? So a good estimate then would be 100 hours were worked at overtime. And you can take that average rate of pay times that half rate of premium, overtime premium, and that would be a good estimate to come up with for those types of overtime calculations. Again, that is just a suggestion. You may already have a method calculated. So moving along, this is Alex. He's a concert venue usher. He's earned tips and overtime. for 2025. Now, this is what the draft Schedule 1A, brand new form, and it was drafted to accommodate these extra deductions. So there's a section there you can see for qualified tips and a section for qualified overtime. There's even one for the senior deduction. And it factors in the taxpayer's AGI and filing status to see if they're under that, they have reached that AGI limit or not. And it calculates what they're going to be able to deduct on their 1040. And it does the total amount from this form then gets transitioned over to the 1040 in the section that calculates their total liability. So you're going to be using the W-4 to calculate the overtime if they want to capture it during the tax year. You're going to be providing information to the employee. So Alex will have the amount of tips or overtime that he had. He'll be able to enter those amounts along with the W-2 information in this Schedule 1A and follow along with the form. And it's, it looks very simple that anyone should be able to calculate it. And then, like I said, it transfers over to the one section on the 1040 that will capture those deductions. So let's see, do we have, how is Greenshades going to do that? Yes, Josh will be addressing that later.
Well,
So,
Laura, yeah, we're going to save time for some questions. Want to make sure we do get to that. There's some additional resources that we want to just make sure everybody's aware of and a few things to cover. So do you want to cover this really quick and then we can come back for some Q&A here in a few minutes?
sure. So, we have to prepare for 2025, whether we have real guidance or not. We still have to prepare. We have to get some numbers, some good estimates. And have to be able to provide this to the employee. So create distinct earning codes, especially for that overtime premium. So the employees understand that it's not their total overtime that's going to be eligible for this deduction. And what does this overtime premium look like as being exempt? So hopefully you're going to be able to provide an estimate for the year to date overtime and the tips, and they'll be able then, if they want to adjust their W-4. You want to be able to capture reported tips per pay period going forward. You already hopefully will have your estimate. And then you're going to be adding in per pay period going forward. So you have your total aggregate amount at the end of the year. You want to also identify these employees with that tip position once they finalize that position code list. And it would be really nice if you had a system that would be able to export all of this information, because we're going to have to report it somehow for 2025. Is, are you going to use the box 14 for 2025? Or are you going to use, a different type of document? We don't know exactly what the IRS is going to ask for. So that's the takeaway on, getting ready for the year end. Have those numbers ready for the employees so they have an idea what's really they're going to be eligible for. Okay, Josh?
All right, great. Thank you, Laura. We're going to come right back, and there are a number of questions. We appreciate y'all dropping those in the Q&A. We're going to go through those here in just a second. Again, thank you, Laura. That was super helpful. Honestly, I'm learning a lot myself as someone that is relatively new to Greenshades. I'm constantly impressed by how deep our knowledge is when it comes to this, and Laura's a massive part of that. And the reality is what we cover today is kind of just scratching the surface. So this stuff doesn't stop evolving when this webinar ends. There's, new rules, new requirements, new headaches. They're always popping up. And that's exactly where Greenshades can really make a difference. And our whole job here is to make all of this easier for you. Whether that's taking complexity out of the, overtime management, the automation of the tax updates, all of these things that we've addressed in some way, shape, or form throughout today's content. And then, another big thing is Laura's mentioned it would be nice to have a system that was future proof, that would do these things that are now going to be, the moving goalpost of our requirements. And so if you're sitting there wondering if your systems are ready for what's coming next, you're not alone. A lot of people are. A lot of companies are asking that same question right now. And that's where we hope to be a great partner if we can be of help for you. So, and then one other thing I'll mention before I'm going to deploy a poll, and then we'll go back to Q&A. Might feel early to be thinking about year-end forms, but Greenshades does a lot of this. I think I heard almost 4 million last year, something like that. But it might feel early, but getting a plan in place, actually addressing it earlier versus later, there are cost savings involved with that. There's also peace of mind knowing that there's a plan in place before the chaos ensues later in the year and early next year. So we'd love to let you know how we can help with that and be a partner for you for that as well. So with that in mind, I am going to launch a final poll, and while the poll is up, we'll start picking off some of these questions and hearing from Laura on them. The poll is pretty simple. It's how can Greenshades support you? There's three options here. If you would like to have a conversation with somebody about your future-proof, readiness of your systems with some evolving requirements, there's an option there. You can indicate, and we'll reach out and have that discussion. If you're interested in our year-end tax form services, how we approach it, and pricing, early bird incentives, and things like that, you can indicate that as well. If you don't need anything today, that is great too. We're just glad you're here. If by chance you want both of the first two, I think this is single response, but we'll be in touch and we can kind of navigate that once we get in touch. So we're going to leave the poll open for a minute or two while we start answering some questions. Let's see, Laura, what sticks out to you? Which questions do we want to hit on?
So, there's one question about the 90/80 work week, and I haven't seen that in the regulations. I'll have to go back and revisit that to see how that's addressed. And we'll get back to you on that one. If you're a payroll client, the screen that was just up, it's going to calculate the overtime premium for you. It's going to automatically split out what is the regular versus the overtime. It's going to sync that W-4 with all the changes or no changes. And coming soon, they are planning on getting a report that is going to do that overtime premium reporting. And as always, I know I'm heavily involved in getting everything ready for the year end, all those forms that we support. You can go to our website and there's lots of information there available to you for the comprehensive year-end support that we do provide. The IRS has not given us guidance yet on how we're supposed to estimate that. That's why I said it, this is just a suggestion. So we will keep you informed. We do post to the blog. We have a LinkedIn chat, compliance chat. If you want to be added to that, we can get you added to that. And I also have a quarterly newsletter that we post. So those are some avenues that we would, as soon as we are aware of a change to any of this guidance, we post it. So keep an eye out for changes to our, it's go.greenshades.com, the blogs, the LinkedIn, compliance chat. If you want access to that, please let us know, and I can get you added into that. And like I said, there's a quarterly newsletter also under the compliance section of the blog on the website. So right now, we don't know how the IRS is going to suggest that we do these estimates. You can start laying out your information. I think I'm pretty certain. I'm not 100% certain, but I'm pretty certain if you come up with a good estimate and you track it, don't forget to keep your documentation. They'll probably take it. So the overtime, if you're a payroll client, we're tracking it for you. If you're not a payroll client, it's going to be whatever your payroll package provides, and how that's going to be imported into your end forms. Again,
Real quick, Laura,
go ahead.
just wanted to let you, I think we're 3/4 on the poll. Just a reminder for any of you that stepped away. There's a poll. If you need anything from us, there's a couple options. If you'd like to speak with someone about your system's readiness for any, evolving requirements or information on your informed services, go ahead and fill that out. I'm going to pull a poll down here in 30 seconds or so. Okay, thanks, Laura. Back to you.
So if there's any other questions, just let us know. I think I've addressed all of them in the Q&A section. Oh, there is a question here about vacation and holidays that are not worked. They do not count towards overtime. The overtime is anything worked, physically worked over 40 hours in any one work week that you've established. So no, vacation and holidays do not go towards the qualified overtime. If you may pay it, and that's a choice that you as an employer can do, but you're not required to by the federal regulations. It's only over, anything worked more than 40 hours. Let's see.
Well, hey, Laura, I'm going to go ahead, and if there's any more, we can stick around, but I know we build this as 45 minutes. Just a couple last minute things before we leave. Thanks for participating in the poll. If you didn't get your vote in, we'll give you another way here in a second to email us if you need anything. Check out the resources again. Now's your last chance to grab them here today. I do believe we'll also include those in our post-webinar follow-up communications, so keep an eye out for that. Speaking of planning ahead, we're hosting a series of resources of webinars, power sessions that will each carry its own, theme, and the aim there is to be as helpful as we can to y'all through this busy season over the next several months. And so the registration, there should be a link. I think we're going to drop it in the chat. There's also registration on the resource center. So take a look at that, and we hope to see you at these. If you can't make it, as always, we will send you recordings. We know timing is sometimes difficult. So by all means, register, and we'll be sure to send you those recordings. With that, finally, I just want to sincerely thank you all for joining. This is my first webinar at Greenshades. I'm excited to be here. I appreciate you all spending a part of your day with us. We sincerely hope this is helpful to you. We would love your feedback, good, bad, or otherwise, on was this helpful? Did it hit the mark? Is there ways it could be more helpful? So reach out, engage with us. There's an email there that if you have any questions or would like to speak to sales or offer feedback, jot that email down, and we'd love to hear from you. With that, we're over time. I think we cover all the questions. So thank you again for joining us. Laura, thank you so much for your time, for your commitment to being helpful to our customers and really to the world at large. I mean, anybody can join these webinars. So just thank you for being available for that. One last time, thank you for joining us. We hope to see you at the next one. Bye.
Bye.